Hello, today we'll be discussing the concept of petty cash funds. Most companies require that all payments of cash are made with authorized electronic transfer or a double-signed check to ensure there is sufficient monitoring of cash flow. While these are great control activities, imagine having to do this extensive process for minor expenditures, such as the purchase of miscellaneous supplies or a small postage. It's just too tedious. That's why there is a petty cash fund. A petty cash fund is an amount of cash kept on hand to pay minor expenditures. They are a simpler alternative to credit transactions and a convenient way to pay for small purchases. Petty cash funds involve three activities. Firstly, establishing the fund, then making payments from the fund, and lastly, replenishing the fund. To establish a petty cash fund, a check is written for the desired amount of the fund. The check is then cashed and placed under the care of a designated employee. A journal entry is then made to record the establishment of the fund. For example, suppose on the 1st of December, Maria's Jewels cashes a $1,000 check to establish a petty cash fund, giving cash to the designated custodian, Jess. On this date, Maria's Jewels would debit the petty cash fund and credit the cash. There is no change in total assets, as Maria's Jewels simply appointed $1,000 to be used as petty cash and no disbursements have been made outside of the business. Now, payments must be made from the fund. Payments can be made in one of two ways. Firstly, employees can seek reimbursement from the fund for payments they have made personally. So if Jess purchased office supplies such as pens for the company with her own money, she'll be able to get this money back. Or, cash can be taken directly from the fund. So Jess can purchase office supplies with cash directly taken from the petty cash fund. In both cases, the designated employee must collect all receipts of purchases under the petty cash fund. This is necessary control which ensures the employee is working in an ethical manner. The last step is the replenishment of the fund. As the petty cash fund decreases, it needs to be replenished. This is done by counting the remaining cash in the fund and cashing a check that brings the total cash amount into the fund to the original balance. The receipts are then used as documents when recording expenses. To demonstrate this, suppose on the 31st of December, Jess examines the petty cash fund and prepares a report. All the receipts total to $850, and so the fund needs an $850 check to get to the original balance and be replenished. The expense accounts are debited while the cash account is credited, highlighting the loss of cash due to these specific expenses. Due to just recording the expenses from the fund, the asset and equity account are both reduced.